Stand by, Gabriel.
I'm here.
10 seconds. 5. Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Gabriel Micheli, CFA and Senior Investment Manager at Pictet Asset Management. He's also one of the managers of the John Hancock Global Environmental Opportunities Fund. We're going to discuss why companies that provide environmental solutions will outperform the market over the long term. Gabriel, it's great to have you with us. Welcome to Trade Talks.
Thank you very much. It's a pleasure to be here.
And what does this belief in outperformance, what is this conviction based on?
I think it's pretty simple. We think that in the future, companies bringing environmental solutions will outperform the market, and this is based on a few things. We think historically, the true value of nature has not really been seen by the market or by the economy in general, and this has led to a lot of overconsumption, over pollution, a lot of issues that we are facing, and people are realizing what these issues are today. We think there is we call them externalities, and we think they will be internalized over time. I mean, we're seeing the flooding that are taking place in many places. We're seeing the fires taking place like in California or in Australia. Today, the public opinion has really realized that climate change, for example, is a serious issue. But others like plastics, biodiversity are coming more and more on the table, and people are realizing what these issues are. So we think this combination of people understanding the issue, politics doing a lot, like we have seen last year, a lot of the stimulus plans, that have been planned for the coming years will be directed towards green technologies, and this is in China, in the US, and in Europe. It's really aligned. And we think that with all those trends, companies that provide the solutions will tend to outperform.
So is this strategy working?
So far, it has worked very well. I would say we have launched the strategy 7 years ago. The strategy is now about $12 billion in size, and we have outperformed the global market as measured by MSCI All Country by around 5% per year over those 7 years. And this has been done with a risk that was about in line with the market as measures by volatility or beta. So we can take the same amount of risk, but we are on a trend with a higher growth that has delivered superior performance.
Gabriel, what differentiates the Pictet Global Environmental Opportunities strategy?
I think at Pictet, there are some things that we do a bit differently. First is, we have a long history investing in environmental funds. We launched a water fund not just a few years ago, but 20 years ago. So it's been a pretty long time. I've been there for 15 years, and I've launched different strategies like clean energy, a sustainable timber fund, and there's this global environmental opportunities strategy around 7 years ago. So we have a long experience with around 40 investment professionals looking at the different themes. And I think with this background of very focused people and history, we have really something that is pretty unique. And then we also innovate, like to create this environmental strategy. We didn't just put a name, on some companies and say the environment will be good for them. We created the methodology that is science-based. It's called the planetary boundaries. It was very unique when we looked at it about 8 years ago when we started. It's a group of scientists that have tried to identify all the environmental issues. They have found around 9. You have climate change, but you have chemical pollution, biodiversity, and others. And very recently there was a very good documentary on Netflix about it that is very interesting. And that means it's getting more mainstream, and people understand that to tackle environmental issues, you have to tackle all of them and look at the planet in a holistic way. So with this, we're able to actually identify companies that people might not know that have an impact on the environment, that are maybe unknown by the market, but that will deliver superior growth over time because of the environmental trends. And this is very, very unique to us, and has really helped us to create the universe that is outperforming.
So can you give us some examples of an industry or companies that you like or fit within that methodology?
Yes, so I can give you, give you some examples there. There, obviously, our universe is working well as a whole, but we're basically stock pickers, and we want to get the best one from that. And there are some sectors like, for example, in the software industry, where a company like, for example, ANSYS, which is making simulation, very high tech, to make a plane more efficient, or a car, to improve a car. Or a company like Autodesk, which helps to create new buildings that will consume 30% less energy, and probably at some point being no new energy used by the buildings. So those are very high tech companies that we have that are very interesting. Then you have a few others, like for example containerboard companies that people are switching now packaging from plastics to renewable packaging, and for example sustainably managed forest can be very well used for that. It can be recycled. So it's existing markets with less growth, but actually some extra growth coming from the environmental side. And as it's difficult to get new capacity online rapidly, then those companies benefit from that. And this whole group of company, the trend was even accelerated by the COVID issues. Like people want to work online on softwares. Also, they order things from their home, and this will be packaged by Amazon or others, often with containerboard. So those would be a few examples, but we have around 50 companies that we all strongly believe in.
And Gabriel, that was my last question to you, just how many companies are within the portfolio, but in terms of how actively it's managed, how are you turning this over? Do you hold them for 6 months, a year? Is it more active than that?
Our name turnover is around 30%. So on average, probably we hold a company for 3 years, but there's probably around 60% of the portfolio that we hold for longer than that, or that if possible, we would never sell, that are just the compounders that are a good, base for the portfolio. But then there are always opportunities, like with COVID-19, there were some opportunities or changes in the market. And then there are always some companies that tend to do better on a more cyclical basis, or that we buy more opportunistically, and there will be a bit more turnover on those companies.
All right, Gabriel, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.